Hello there. Welcome to Password Forex, trading with the smart money, the real way to trade with the smart money. Today, I'm going to be discussing about the order block, as what is the order block, what is the rationale behind formation of order block, what is the valid order block and invalid order block. I will also be discussing about the bullish and bearish order block in different scenario. I'll be showing you the graphic slideshow representation or presentation rather for order block. Then later on, I'll be sharing some chart example for you so that way you would understand. So let's get it started. Okay, so this is the order block bullish scenario for order block. As you can see right here, the order block is basically an area where institution manipulate their buy and sell order. In this case, they basically push the market to the downside. So thus creating this last bearish candle that grabbed the liquidity of the previous candle, moving to the upside impulsively, breaking the structure, leaving the gap between these two candles. So thus making this order block as a valid order block. So this is the area that we are basically looking at to enter our position. And once we see the order block has been formed and it has created a valid order block, and that break the structure with impulsive move, we kind of enter our position for basically to buy this market. So let's move on to the next slide here. This is the bearish scenario, is the opposite of bullish. So basically this they try to push the market to the upside, created this last upward move, this last candle that took the liquidity of the previous candle, basically taking the stop losses of the traders, moving the market to the downside, breaking this structure, thus making this order block a bearish order block. Let's move to the next slide here. As you can see, this is the formation of order block, and which is valid. Why is it valid? Because it has moved to the upside, leaving the gap. There is a gap between candle number 1 and candle number 3. So there's a gap in between. As you can see, this is a bullish order block. That is also valid order block. Okay, so let's move to this next slide here. You can see there's a downward move, and all of a sudden what happened, this last candle took the liquidity, moved the market to the upside impulsively, breaking this structure, leaving the gap in between. So this has become our valid order block. The rationale behind this order gap is that institution left lots of orders sitting right here, or resting order that haven't been executed or mitigated. So when the market visit, it comes back to these areas. It moves, it create those pick up those orders that have left behind and move market to the upside again. So this is the area we'll be looking for to enter our position. Let's move to the next slide here. So this is the scenario of invalid order block. The reason being that, see, the market moved to the downside. Last bearish candle took the liquidity, moved the market to the upside. But when the market came back, it already taken those orders. So that's leaving no gap. So when there is no gap, there's basically no order sitting right here. So there's no point entering the entering our position to this particular area because there are no orders. So market does not have a reason to stop here. It might go down through these order blocks. So this is invalid scenario for the order block. So I would never enter my position if there is no fair value gap. Okay, so let's move to the chart example. All right, so there is a chart example of an order block, bullish order block. As you can see, I already marked here. See, this, the market was coming down. This was the last bearish candle before the up move, breaking this structure here, creating a fair value gap, grabbing the liquidity of the previous candle. As you can see, market was down. move down, basically showing that the market was going to go down. In fact, it was manipulated and went the market the other way, trapping the traders here at the wrong side of the market. And you can see this is a valid order block because it has created what? Order fair value gap. There's a gap between red candle and this third candle right here. Let me mark it here for you. Okay, so FVG, which is fair value gap, has been marked right here. So that's making this order block a valid order block. As you can see, the structure was broken. See, this lower high was taken by this move. Then this also lower another structure break was happened right here. So there was a valid order block, as you can see. Uh, right here, impulsive move, breaking the structure, leaving the fair value gap, making this order block a valid order block here. Let me show you the example of the bearish order block right away. Okay, folks, here's the example of bearish order block. As you can see, market was moving up. This was the last up candle, took the liquidity of the previous structure high, and impulsively broke the market to the downside. As you can see, there's an impulsive move to the downside. Let me just mark this order block as well. OB, which is right here, this last candle. And now I'm also going to mark my fair value gap here between this candle and this candle, thus making this order block a valid order block. As you can see, impulsive move to the downside, breaking this structure here. So when the market to visit around this area, you can see right here. Let me extend this order block. Let me see the reaction right here. Look at that. When the market comes right around this area, we showed the reaction and went down basically significantly. So the entry criteria would have been to enter this order block. Let me just remove this one right here. Would have been either from the low of the candle, which is right here. Let me use my PNL here. Right here, short position. You're selling the market, right? Putting our stop loss right here. So my entry would have been at the low of this candle. This is entry number one. This scenario number one for the entry, as you can see, right? Let me extend it right here. Okay, so when the market comes around this area right here, right, you can see it just took my tap into my order and went down actually. This would have been entry number one. My stop loss would have been 19.9, almost 20 people, as you can see. I can also reduce my stop loss here by moving my entry a little bit further, like 50% of this, like midpoint of this order block right here. So 50% around this area. See, I can reduce my stop loss to 12.6, so almost 8 pips, 7.4 pip reduction in my stop loss. I can take my profit actually as soon as I see my 3-to-1 risk to reward. As you can see, my 3-to-1 risk to reward would have been around right there, around here, 3.6. I would have taken my first 80% of my position here, and after taking 80% of my profit, I can move my stop to break even to right here. So I'm not going to lose any money here because my trade is already in a profit. 80% profit has been taken. See, and if market comes and take me out, so be it. I'm already in profit. I already took 80%. Uh, so that way my profit is secure in this trade. All right, so that's how you trade basically order block. This is not a trading entry or whatever. I just wanted to show you how order block is for working, where order block is forming, what is a valid order block, what is invalid order block, what makes order block valid order block or invalid order block, as you can see. It has to have a fair value gap and break the structure. It has to be impulsive move to the downside in case of bearish scenario. Okay, traders, hope this was insightful. Thank you very much. Just make sure you mark your chart for the order block. Make sure you mark a valid order block and understand the rationale behind it. All right. Thank you so much. Happy trading. Bye-bye.